Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value invest. And today, as every weekend, I give you my weekly update on my real money portfolio for week 23 of 2021. And overall, the performance of my portfolio since the start as the 2nd of December 2019 is 70.77%, and this is a big outperformance to the S&P 500 of 34%, even if the last week wasn't the best. And in today's video I want to go through these topics. First of all, I want to talk about lump sum investment and dollar cost averaging, because I received a bigger amount of money last week and just want to tell you what I did with it and why I think this is hopefully a smart move. And then go to the transactions, dividends, and the performance overall. So let's go. But before we start, don't forget to subscribe and ring the notification bell so you will never miss another video and you will have full insight to my real money portfolio. Thank you. So last week I received a bigger amount of money, around $10,000. Every time when you receive a bigger amount of money at one point, then the question is what to do with it. Invest it over time, like dollar cost averaging, or just invest a lump sum at once? This was a question I have to answer also for me. And when you remember, even a week ago, I had a cash of 23.36% in my portfolio, so quite a lot. And of course, with this new amount of money, with a $10,000 on top, this was way bigger, and then the cash amount was just a lot. And so you have to think about what to do with this money. And then, as I said, the question is invest everything at once as a lump sum, or in dollar cost averaging maybe, or just try to timing the market, especially in a high valuated market like right now when we are at the top. Then it's very difficult to say, okay, I put everything at a lump sum into the market, because sooner or later, of course, we will have a crash or a correction. This is given, of course. But when you look at the statistics, and here we have a statistic from 1926 to 2011, then you see that the lump sum investment, at least compared to the dollar cost averaging, is way better. 2 out of 3 times you are better with a lump sum investment. This is quite incredible, especially over a long period of time with all the crashes since 1926. And when we look at the performance, this is from 1974 to 2007, 8,200 trading days. Then you see that when you are full invested all days, you have a performance of 13.4% per year, and you are better than when you are dollar cost averaging. And why is this? The reason for that is just, if you only miss the best 20 days of every year, you are only at 10.8% in the performance, and it gets worse and worse. Quite incredible. But this leads you to the idea just to invest everything you have at once. And also here another graph, this is from 1990 to 2019. You see how much better you are when you are fully invested compared when you miss the 20 best days of the year. Really incredible and something to think about. So the old saying, time in the market beats market timing, is just right. It seems like it's just right. Also, it's almost impossible to time the market. And so the conclusion must be just invest, but of course, most important, invest in good quality companies. This is key, of course, and this is key on this channel. And so I used the amount of money I got, the $10,000, just for a kind of portfolio rebalancing, because I'm very happy with the companies I have in my portfolio, and so I just use this money to add to my current positions. And with that, we are at the transactions of last week. First of all, I bought 8 more shares of Allstate for $134.94. And so now I have 33 shares of Allstate, purchase value of $4,006 with a purchase price in average of $121.39. And so I'm up already 8.51% with this position. Second of all, I bought 12 more shares of Progressive Insurance for $96.45. And so now my position is 45 shares. My purchase price in average is $92.91. And so I'm 0.81% up. Next up, I also bought more of Alibaba. I bought 6 more shares for $216.55. And my whole position now is 32 shares of Alibaba with a purchase price in average of $225.58, and I'm down 6%, so this is my worst performance stock so far right now. And also the second China stock in my portfolio, I bought more. I add 25 more shares of Tencent for $77.64. And so I own now 59 shares of Tencent for $76.03, and I'm up here 1.54%. And last but not least, I also bought more of MI Homes at 2 different dates. First of all, I bought on Tuesday 22 more shares for $68.09, and also on Friday another 10 shares for $62.53. And so overall now I have 92 shares of MI Homes with an average purchase price of $64.94, almost $6,000 purchase value, and I'm down 1.68% with this position. Very, very good company. I also made a video about that. Like every other company in my portfolio, you find their deeper analysis, and I just answer why I think these are great long-term investments and great companies at all. And so with MI Homes, I just used the weakness of the last few days. All the house builders are weak lately, and the reason for that is just the inflation and the anxious of that the interest rates get higher. But overall, MI Homes is a great company with great financial numbers, and so I just used the weakness of the last few days to add more and more. But then of course, when I add so much and almost deploy all of the $10,000 last week, then of course the question is, why not invest at 100% all the time? And the simple answer to that is, I'm just too scared. Don't feel comfortable, especially with these high prices in the market, to be full invested, even if when we look back at the statistics of the lump sum investment, maybe it would be the best performance in the long run. I feel safe when I still have 23% cash left. This is the current pie of my portfolio now after all of these transactions. As I said, you find deeper analysis to all of these companies on my channel. And so with this 23.7% of cash, I feel comfortable, and when we get a correction or a crash, and we will sooner or later, then I can add more of these companies, or maybe also of others when there are good chances. So then let's take a look at the dividends, and that's very fast because last week there was no dividends at all. And then also, as always, look at the performance. And when we look at the performance of the single stocks in my portfolio, then we see Imperial Oil is still the best performing stock in my portfolio with 127% up, followed by Legend & Platt, Bank of Nova Scotia, Facebook, and so on. And as I said, Alibaba and MI Homes are the only two in the minus right now, but this is not a big deal because both of them are just great companies, and I will just stick to them as long as the business works for them. And with this portfolio, I have a performance since the 2nd of December 2019 of 70.77%, which is an outperformance of over 34% to the S&P 500 over the same time span. Even in the last week, my portfolio underperformed because of the weakness of MI Homes, also of the China stocks. The insurances wasn't very good last week, but it is what it is. And so overall, I'm very happy with this performance. And if you like the whole idea, if you like the full insight to my real money portfolio, then please subscribe to my channel, ring the notification bell to never miss another video. And then we will see the next time with the analysis of another stock, and next weekend of course with a weekly insight to my real money portfolio. See you then, take care, bye bye.